Can I donate one of my properties to my daughter? Will I pay tax on it? My daughter will pay for the transfer fees and registration costs. What would be the best way to give my daughter this property and, avoid excessive costs in this regard? Bruno?
We start getting this question a lot, especially around the estate planning side of things, when people start looking at where their properties are sitting, whether they're holding it in their personal names or whatever the case is. Maybe just for the sake of context, donations, any donation that gets made has a tax implication to it, right? So SARS will allow you to donate up to 100,000 Rand in any given year, tax-free. Anything above the 100,000 Rand, you're typically looking to pay about 20%, 20% tax on that donation. This is where it starts becoming a bit scary to move properties around. And this is why we normally so adamant that you actually do estate planning prior to buying the property, because it's a lot easier to deal with the problem initially as opposed to after the situation already arises. So but there are ways of doing it. In a case like this, we do need to ask certain questions. Like, for example, the answer would be different if this was a property investor versus simply a person that has a residential property and just wants to move it off to a trust or something along those lines. So there's very creative ways of doing it. Unfortunately, we don't have the time, to go through the very, very, very creative ways of doing it. But simplistically, if you donate, typically you have to pay donations tax. So what we'd be looking at doing is we'd be looking at selling the property to, for example, to a trust. The reason I'm saying trust, also maybe just to take a step back, is you can do it directly to your daughter. But then your daughter's going to have the same question in a couple of years' time when she wants to give it to her daughter, or something happens and she passes away, so typically speaking, if a property is in a family environment and people are able to benefit from this property, be it by way of occupation or renting the property out and getting rental income, I normally suggest putting it into a family trust so that it can just sit in the family trust, especially with estate planning in mind. It's not a bad idea, because depending on the assets that you have, there may be some form of justification to be able to move it to the family trust. Either way, though, you would probably be looking at selling this property to the trust or your daughter. The reason I say sale is because then it's not a donation. So that's already step one. You'd be looking at doing an outright sale, skip the donation tax part of it. So that ticks one box. But now, unfortunately, SARS knows that people do this, because when you sell the property, then all you do is you create a loan account and you say, I've sold the property for R1 million. So you've now got the property, but you owe me R1 million, right? And then there's ways in the books year after year you can deal with that R1 million. The problem is, people used to do this a lot with trusts. And then SARS introduced certain provisions in anti-avoidance provisions in terms of Section 7, basically saying, no, you're not allowed to do that. If you have a loan against a trust, there's an expectation that the trust has to repay this loan to you at a certain interest rate. Because if it doesn't, we're going to consider that portion of the interest under the amount that they state as being the appropriate interest rate. We're going to charge you donations tax on that. So SARS has become very smart to try and avoid situations like this from arising. So there is a bit of maths that you'd need to undertake if you do move it to a trust. If you do move it to your daughter, you can do it. You can even consider doing it in an installment sale agreement, for example, over a period of time where your daughter buys it from you. If you want it outright out of your name, you can transfer it to her and still have a loan account where she would owe you money every year, and you could possibly write this off every year up to the donation tax amount or the donation allowance. Every year you write off a little bit, and then it's in her name. Typically with things like this, I'd also consider looking at things like usufructs. Simply being that if it is your property and you live in it and you want to stay in it, you just want to move it to your daughter again for estate planning, then you register a usufruct that allows you to live on the property for the duration of your life. And if any viewers are, and sorry, this is quite a in-depth answer, and it could actually be even more in-depth. So I do feel like I skipped over a million things, which just takes me back now straight to the beginning where I go, the reason why a person might want to move properties to begin with from an estate planning perspective is because if a person passes away, right, there's a lot of tax and costs associated with owning assets in your own personal name. So as part of estate planning, people start trying to move the assets across to the people that are going to inherit them anyway, so as to avoid them growing more in value and more cost being paid. They move it sooner rather than later. And this is why we use trusts to do this planning, because then we don't worry about moving it before death or after death, because in a trust, it just stays there for in perpetuity. And you don't need to worry about this consistent planning at any given point. So that's just the reason why the viewer may be asking the question. And that's just, yes, I suppose some of the suggestions, but yeah, get planning.
And the question goes, it says, we bought a house and were under the impression that our names would be automatically registered on the municipality's side. It now turns out that this is not the case. Apparently, the previous owners still have to transfer ownership, and we have to change the account into our name. Please advise. So, fastest lives the longest. Who's going to go for this one first? Bruno.
Bruno unmuted. He's like fingers op die knoppies.
Yeah.
100 randjie.
I've made the mistake way too often of speaking while I'm on mute. So now I have a system that works at least 95% of the time.
Well, now you're on the ball.
Okay. Look, so it's a relatively simple process that the conveyancers normally assist with to a certain degree. So all that really happens is you approach the municipality, you let them know when ownership has passed. This is normally confirmed with a letter from the conveyancers, and you hand it over to the municipality. And it's quite as simple as that. The municipality, interestingly enough, then does their own calculations in the background. So it's quite a strange one. But they do their own calculations. If they've been charging the wrong account, they'll reverse the previous account that it's in the previous person's name and charge it onto your account. So there are a few things in the back end that happen with the municipality, but the actual change of details is as simple as handing a letter over. And there's people you pay to do this. So if you go to any conveyancer with their salt, they will give you the number of someone, and this person will go and do all of this for you, so you don't have to do it yourself.